Autodesk beat the street in its latest earnings report, but could economic headwinds stall the design software company's steady growth path? Well, joining me to break down recent earnings and where the software sector is headed next is Andrew Anagnost. He's the president and CEO of Autodesk. Now, Andrew, it's great to have you back with us. And break this down for us. It was another strong quarter from Autodesk with double-digit earnings growth and high single-digit sales growth. What are the highlights for you?
Yeah, so steady. I love the word that you use, steady. You know, we have a very resilient and steady business right now. It survives lots of shocks. You saw that in the results for last year. You saw it looking forward to the guide. The guide for the year, we made it clear that Russia had an impact, FX has an impact. People process those things really well. Even the guide was within range of what people were expecting. It was a little off. So you're probably asking, well, why is the stock taking a hit? What people are doing is they're processing this transition we're doing from multi-year contracts billed up front to multi-year contracts billed annually. And they're trying to understand, okay, it's going to depress our billings this year and then increase our billings the next year. And what they've done is they've taken their models and they said, oh, wait a second, their fiscal 25 billings are lower than I expected them to be. That's the reaction you're seeing right now. But long term, this move to annualized billings is the right thing to do for the company, and it makes it more steady. So people are processing that. They're working through that. As they work through that, I think you'll see some of that turbulence move out of our stock.
No, it's interesting that you mentioned that transition. And do you think investors are also reacting to, the economic climate right there? I think there's
absolutely, yeah.
Yeah, I mean, I think there's some worry, that the softened outlook for this next year is because of an expected slowdown. So what are your thoughts there, and what does that look like?
Yeah, so we pay close attention to this as we set up our guide. And one of the things I try to tell investors and kind of tell the community in general is one of the things that's different about our industry right now is backlog. If you look in the AEC space in particular, and I think we talked about this the last time I was here, is, our customers are still struggling to execute on the backlog, the book of business they have, whether they're in AEC or in manufacturing. That's especially true in the construction segment, where they're struggling to hire people, they're struggling to get through multiple jobs. I mean, I think all of us had the experience driving around a community or a city. Boy, nothing's changed in the construction site in the last few weeks or the last few months. Why is that? Because the GCs deployed their resources somewhere else. So this backlog is something that's allowing our industry to kind of continue through all of this. It's not that they're continuing through without some kind of pressures, but it's also encouraging them to invest in digital technology because they don't see the workforce pressures going away. Same thing in manufacturing. They don't like the changing cost structure. It's costing them more to ship product, but they've still got a backlog of product they have to ship.
So then diving deeper into the numbers, what business segments then are contributing most to the company's growth this year? Is it construction still?
It's AEC and construction, absolutely. They're growing the most robustly. Even manufacturing grew robustly. It looked like in the quarter it showed some soft growth, but that was only because of year-over-year compares. There was a big deal the previous year in our manufacturing segment, and also some FX headwinds from Europe. But you take those things out, we were comfortably in the teens growth rate in manufacturing. But AEC absolutely leads the pack, but manufacturing is not far behind.
And what in terms of demand are you seeing there? Because again, I think there's some concern that some of these end markets are especially sensitive to any sort of economic downturn that may be coming. But what are you seeing?
So what we saw in the quarter was, generally speaking, a demand environment that looked like the previous quarter. There were a few little puts and takes, but in aggregate, they were about the same. The puts and takes were essentially this. We saw improvement in Europe, which is interesting. We saw APAC kind of hold the line, and we saw a little softening in the US. And I think it's logical to kind of project a continuing of that similar business environment moving forward into this year. But we continue to see, and this is an important leading indicator for us, we continue to see robust increases in our monthly active users of our product. So monthly active users continue to increase throughout the quarter. That's an important leading indicator for us of where the business activity is in our segment, and it still stayed positive.
And what about the enterprise solutions segment? I know too, there's concern. We've seen the news. A lot of companies are cost cutting out there. Is that impacting your business growth at all?
Yeah, fortunately, Autodesk has always stayed disciplined throughout this last 3 years. We didn't get over our skis in terms of investment, and we're also in a segment where people want to invest, right? I mean, if you're investing in work from home, if you do work from home productivity software, people probably have as much of that as they need right now. But we're delivering mission critical software that's required for them to actually fulfill and execute on their backlog. So we're in a comfortable position in terms of they need our software, they're mission critical solutions, and they have to get the work done.
And we talked about this earlier in terms of consistency. And Autodesk, on an annual basis, delivered about a 31% growth for fiscal year 2023, and that's pretty impressive considering the slump software stocks were in last year and just the overall bear market. And we also kind of saw that reflected in Autodesk's price performance, just holding up under pressure. Can you talk a little bit about what you think is going on there and how you've been able to deliver growth?
Yeah, first off, it all comes down to the transition we decided to do 6, 7 years ago when we said, look, we're moving the whole business to the cloud. All right. The subscription transition was a painful move for the customer. It disrupted our entire ecosystem for the company. It disrupted our entire ecosystem, but it was the right thing to do. And it's created a more resilient business. Our upfront costs of software are far lower than they were before. Essentially, customers can get access to software at significantly lower upfront costs than they could several years back, and they're taking advantage of that. We've also introduced all types of new models for occasional use. We have a flex model that allows people to burn down tokens for occasional use of our products. So we're responding from a business model perspective to what our customers need. But let's just face it, there's a little bit of luck in everything, right? We happen to be aligned with productivity in a set of segments that are desperately looking for productivity. Construction needs to be more productive. They need it. We're lined up with that. Manufacturing, the conversation. Everybody's talking about diversifying their supply chains, changing their supply chains. They need new software to do that. They need the cloud to do that. So we've been disciplined. We've done the right things, but we also are just lined up with the segments that need the kind of software we're delivering right now.
Yeah, I know when my dad used to tell me, rather be lucky than good sometimes. It helps.
And we always have to remember, luck favors the prepared. So
Exactly. And, talking about some of these trends, we've seen artificial intelligence become a really hot buzzword on Wall Street. And I'm curious how AI is factoring into your future business growth and what you think the opportunity is there.
What I really love about this Chat GPT dialogue that we're having, and I'm sure all of us have played with it. Everybody's gone and done their fun thing with it. I've broken it personally, a couple of times, I was very proud of that. But here's what it's forcing us to do, and it's important to our business as well. We're having not just a business technology dialogue, we're having a social dialogue. What's the implication and is this going to ruin my job? Is this going to change? Is this going to make me irrelevant? And I think what people are going to discover over the next couple of years is that no. The AI has now become a co-creator for me. It gives me a draft or it gives me some ideas, but you know what? It's not as clever as I am in terms of solving the problem in a bigger scope. That's what we want to do for our customers as well. We're over the next few years, we're going to be training fairly large data sets related to things that our customers actually work on so that the software becomes a co-creation partner, gives them first drafts. Here's your first draft of what you're trying to do. The first draft isn't going to be right. It's going to be missing tons of details, and it's not going to be exactly what you want. So we're actually in a really important moment right now where we're talking about everything from high school students to artists and everything in between. And I think it's an important conversation for society to be having, and it plays right into our philosophy on we're not trying to replace anybody. We're trying to empower them with co-creation.
And are there any other trends that you're seeing out there that could impact the company or the overall industry in the near term that investors should be aware of?
Look, none of us want this inflation environment to continue much longer. Okay, it's not good for anybody. Every ecosystem is going to suffer if we continue to see this inflationary environment just keep going and going. I suspect it won't. But I think you're aware, I think all of your listeners are aware that we want to see this subside and we want to see pricing start to normalize. That will be good for everyone. If this goes the other way, it's gonna continue to be rough for a lot of segments.
Well, Andrew, thank you so much for your insights today. We really appreciate it.
Pleasure, Alexis. It was nice to see you again.
And you can head on over to investors.com for more of our coverage. For Investors Business Daily, I'm Alexis Garcia.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.